Hello, my name is Anthony Verney. I'm an attorney and certified public accountant. The IRS has established streamlined filing compliance procedures as an alternative to participating in the Offshore Voluntary Disclosure Program. For eligible U.S. taxpayers residing outside of the U.S., all penalties will be waived. Taxpayers residing in the United States will pay a miscellaneous penalty in the amount of 5% for the year in the 6-year disclosure period, reflecting the highest aggregate balance of the foreign financial assets reported. Taxpayers utilizing either the foreign or domestic offshore streamlined procedures are required to file amended returns for the preceding 3 years and FinCEN Form 114, oftentimes referred to as an FBAR, for the preceding 6 years. In contrast, taxpayers proceeding under the Offshore Voluntary Disclosure Program are required to file 8 years of amended returns and FinCEN Form 114 for the preceding 8 years. Under the OVDP, the taxpayer will pay any tax due together with a 20% accuracy-related penalty and interest. The taxpayer will also pay a 27.5% miscellaneous offshore penalty for the year reflecting the highest aggregate balance for all foreign financial accounts within the 8-year disclosure period. The OVDP process concludes with a closing agreement signed by the taxpayer and the Internal Revenue Service. Under the OVDP, the taxpayer is conditionally protected from criminal prosecution, and the civil penalties related to any income tax owed are limited to the 20% accuracy-related penalty. In contrast, the streamlined procedures do not provide the taxpayer with protection from a possible criminal referral. Moreover, the streamlined procedures do not limit the civil penalties associated with the reporting of U.S. income. For instance, where there is a significant undisclosed offshore income, a taxpayer may be subject to the 75% civil fraud penalty. Further, as a condition to proceeding under the streamlined procedures, a taxpayer is required to certify under penalty of perjury that his conduct was not willful and that the failure to act was due to negligence, inadvertence, or mistake that is the result of a good faith misunderstanding of the requirements of the law. The certification of non-willfulness also requires that the taxpayer provide specific reasons for failure to report all income, pay all taxes, and submit all required information returns. The IRS will scrutinize the certification and may request verifications of the assertions contained in the certification. While some taxpayers may be inclined to proceed utilizing the streamlined procedures based solely on penalty consideration, such a decision could result in significant civil and criminal penalties as well as possible criminal prosecution. Deciding whether to participate in the Offshore Voluntary Disclosure Program or to utilize the streamlined procedures is not a decision to be made without first consulting an experienced tax attorney who will analyze the potential tax, financial, and criminal risks of proceeding under the streamlined procedures. These risks will be measured against the amounts to be paid and the protections afforded under the Offshore Voluntary Disclosure Program.